All right, team. We are live on the Book of Faces right now, and we will be premiering on YouTube shortly. Derrick Evans here, VA Home Loan Specialist, mortgage guy. That's what I am. Trying to give you a perspective on what's happening in the financial markets. Reading between the lines was our theme yesterday. Today, what seems to be happening is a lot of people believe that rates are going to go lower. At least I should say, people who watch my videos believe that rates are going to go lower because that's what I think. It's very possible. Of course, I could be wrong. So the question is, as I'm sharing this here, give me just a second. The question is, should you wait? So we're going to take a look at this, and I'm going to show you a couple things, a few stories I think that are important to pay attention to as we see the narrative really shifting here. And I knew we saw the manipulation that was happening in Bitcoin and cryptocurrency, and I knew the reason behind it was to try to push people out of that and back into stocks. I just remember thinking about the money that I took out of Fidelity to go buy Bitcoin and thinking that, man, that is probably happening a lot, and I bet they don't like that. And so the powers that be have continued to shellac Bitcoin in the interim, and we'll look at that today too as it's under 30K. What's up, Gigi? Yeah, well, you know, if that's, I'm going to say hi to Gigi here for a second. It's hard. This is not an easy market. Getting into a home in this market it's difficult. It's not super simple. But I will tell you this, by the way, and this is the first time I've seen this happen this cycle since the mania really began, which kicked off with COVID. We're seeing people get into houses right now, putting offers in at list price. Some people getting in below list price. So it's not as crazy. You can put your search parameters and actually expect maybe to get a house that's in there. Whereas before, people were looking at, okay, I'm looking under 600K. Here's one 575. Guess what? It's going to sell for 700. So you have no chance. That's not going on as much anymore. So keep the faith, stay after it. Make sure that your agent and your lender are really communicating well together, that they're working hard together to sell a listing agent on why you should be able to get in. So thanks for tuning in. Thanks for chiming in. We are live. You can say what's up anytime. We're going to look at mortgage rates first today before we dive into the other stuff. And I got excited today, I'll be honest with you. It's so rare that we're in this situation. Look at this. So we talked about the 200-day moving average here. This is the Alamo for bears on bonds. This is the last. After this, where do we? I mean, we have to look back. We have to go back pretty darn far to try to figure out. Well, where is the next level of resistance? I mean, is it way up here? Maybe this old support could be resistance way up here, or maybe the new top is going to be up here at the old top, past this 200-day moving average, which we touched today. And so let me zoom back in because I do want to talk about why that's so crucial. We touched it today. Look at this. We touched it. We were actually above the 200-day moving average today for a brief period of time. And I got pretty excited because if we could have closed up here, or if we could have just taken off, remember, we want mortgage bonds to go higher so that mortgage rates will go lower, inverse relationship there. Then we are headed back to the all-time lows. What's very interesting about this, though, is that like with VA refis and even VA cash outs with equity and stuff like that, you're still getting 2.25%, which is the lowest fixed rate we've seen with no points. So even though we haven't gotten there, this leads me to be, okay, maybe the VA rates, maybe the FHA rates will even go lower than 2.25% if this move can happen. We'll see if it happens or not. Listen, the 200-day moving average, I got to tell you right now, that right there, if I could trade these securities, I would. You need serious cake to trade these things. I remember calling around the first time to be like, hey, how do I trade mortgage-backed securities? They're like, okay, you need $10 million to start, and you will be a fly that will get smacked and smashed about. You need serious cake to trade these things. A short right here at the 200 is the biggest no-brainer because that is a big deal. It is not just going to rocket right through it, although I was hoping that would happen. It's not going to happen. We're probably going to have to knock on this door a few times, before we finally get let in. If we get let in, we might get rejection here, and we should all be prepared for that. We should be prepared for rates to potentially go higher. I like locking right here because we're right up against a major moving average, which could send rates higher, bond prices lower. And so I like that as a locking target. If you want to gamble, like let's say you're looking into refining and you don't you're not seeing the savings you were hoping you'd see. Your rate's going down, but maybe you're only saving $80 a month or $120 a month, and you really want to see 200 or 250 or 300 or something bigger. Then yeah, wait. If it doesn't make sense to you, I do very detailed breakdowns. If you send me your mortgage statement, what I do is I do very detailed refinance breakdowns of the numbers, total costs for the life of the loan, everything. And I look at that. And if you meet the certain criteria, there's 3 criteria we're looking at. And if you meet all 3 of those criteria, we call it trifecta. And that's where you can have a lower rate, lower payment, and lower balance before your first payment's due. If you can do that, then for me, that's my personal calculation. It's a no-brainer. You do it. If you can't meet those criteria, then you have to decide what's important to you and whether or not you're going to be in the home long enough to reach break even and capture savings. So for refinances right now, it's really just whether you want to roll the dice or not. If you're in a purchase situation, you 100% lock here. You don't take that chance because we could dance along this 200-day for weeks. We could get rejection once and then come back up to it, and then get rejection again and then come back up to it, and then break through it 3 months from now. That also could happen. So I wouldn't gamble a ton here, but if the savings don't make sense to refinance otherwise, then yeah, wait for a refi. Wait, look, we're still up 9 basis points today. It's not a pretty looking candle, to be honest, but it's what's called an indecision candle. So you see the wick on the bottom and the wick on the top are relatively the same. Very little change though, or difference between where we opened and where we closed. And so because of that, this is an indecision candle. This is the market not sure which direction it's going to head. However, in the face of mad resistance, I'd say that's probably a win for us if we want to be bullish for bonds. Knowing full well that these bonds are absolute trash. I mean, toilet paper at best. They are worthless in the long run, 2.5%. That's not even what people are getting. They're trading at 104, so you're getting like 2% on a bond that does have some risk to it. So would you take some risk for 2%? I sure wouldn't. The Federal Reserve is. Apparently some big funds are, but I sure wouldn't. I'd trade them because I can track the movements, but no, sir, not interested. So right now, the Fed is basically making this move for us. It's very, very clear. When the Fed spoke last week, they're just very clear about, hey, listen, we're not willing to start changing anything yet. And we've talked about tapering. We voted on a couple times. We just don't want to change anything just yet. And I think they're waiting for something. I don't know if it's a stock market crash. I don't know if it's the crypto crash that's going to wipe a bunch of people out that could be coming. I don't know. But it feels to me like the Federal Reserve is waiting for something to happen. Like, no, we don't want to stop this because it's hard to start it back up. Let's just keep it going because there's something coming. There's something coming. That's what it feels like to me. Let's take a look at this here real quick, by the way. Oh, yeah, let's start with crypto since I'm already there. Bitcoin below 30,000 is bad news. If you own crypto, if you own Bitcoin, and you can't take the pain, if you're not in it for the long haul, you're going to find that at some point here you will break. And Bitcoin can't go higher until everyone who has paper hands has sold and is out. And that's just the way that markets work. And there's still a lot of that in there, I think. And so we could see Bitcoin go lower from here. A lot of people were saying 28.5. I did analysis on it. And I think 25 or 26 is possible if we can catch a bottom there. But then you're going to have 30,000 is going to be major resistance on the way back up. And that's the big problem. 30,000 is going to be major resistance on the way back up. So hopefully if you bought crypto, you followed this show, you're in it for the long haul, you're dollar cost averaging, you're buying whatever you can afford every week. You're buying it automatically so you don't have to think about it. Your emotions are removed. If you do that, you'll win in the long run. Gold still over 1,800. Oil, 67.5. So still a lot of questions about what's going to happen next with oil. Stock market rebounded today. Remember we predicted that yesterday? Hey, every time we've seen a big down day, the next day, right back up. What is going on there? What is that? Is that manipulation? 100%. 100%. Look, if I told you buy stocks every day that they're down, you'll win the next day, and that kept happening over and over, eventually would you keep increasing your bet? It's like if you said, hey, every time it lands on black in roulette, bet red the next time and it's going to land on red. And that kept happening. How much money would you have on red after like the 10th or 12th time? You'd have a ton of money on there. Everyone would. And so, Are there psychological games being played here? I tend to think so. I definitely think the market's being manipulated. In fact, we know the market's being manipulated. There's no doubt about it. So, I would just be really careful here with stocks. And hopefully with stocks, doing the same thing. All investments, literally the exact same thing works. Dollar cost average, buy a little bit every day or every week or every month or whatever. Just have it set up automatically, automatic investments. Someone asked me one time, I'm rolling over a 401k from a previous employer at like $50,000. What should I do? Take it, put it in, roll it over, and then deploy however much you feel comfortable with. $2,000 a month, buy your IVV or your low-cost index fund, and just have it do it automatically every month. And you don't think about it. You don't have to think about it. It'll dollar cost average automatically. You'll get your dividends, automatically reinvest those too, so you can get some compounding effect. It's a beautiful thing, okay? It's a beautiful thing. There were a bunch of, I don't know, maybe I'll even show it to you. Jeff Bezos and the Blue Origin space flights. That was all very interesting. I'm not going to talk too much about it. There were a bunch of articles today that were just obvious propaganda. I'm not going to get into that either today. But here's something that was interesting and has been said for weeks and weeks and weeks in the Bitcoin crowd. As soon as Elon Musk said, hey, I feel like Bitcoin mining is kind of dirty for the environment, and here at Tesla, we're not into that. So, we're not going to accept Bitcoin anymore. Now, finally, you're seeing some research come out that Bitcoin mining isn't nearly as bad for the environment as it used to be. And a lot of the miners, because for mining, power is the thing that you have to figure out. That's the thing you have to solve for, is power. Essentially, the amount that you get paid for mining is about what power costs. So you have to figure out efficient power in order to make any money. And that's what's happening. These big miners are figuring it out. They're doing solar. Some of them are doing geothermal. There's a lot of stuff in Iceland. And that's where it's coming from. So this one was interesting because I am calling absolute, complete, and total BS on this. You know how I feel about Diana Olick. But she's saying builders pull back as more home buyers are priced out of the market. No. Builders right now are doing every single project they can. However, it's not that home buyers are priced out of the market. It's that home builders are priced out of the market in some cases. They want to ink every deal that they can, but it has to at least pencil up front. Do you know how many things can go wrong with a new build project? Do you know how much cushion you have to plan for all the things that will go wrong? Because in a big project, things will go wrong. Not to mention the market can shift on you before you can actually sell a home. So builders are not pulling back because home buyers are priced out of the market. That's ridiculous. What's actually happening is builders are signing up to do every single deal they can that pencils. I mean, with the ferocity that has never been seen before. So this information is completely oppositely accurate. It's completely inaccurate. The opposite's true. Now, builders won't do deals that are bad. They may opt out of some of these higher price developments and stuff like that. That's why you see like a lot of new construction. It's either townhomes or really expensive homes just because of regulations and the cost to build. Here's something that's also really interesting. A lot of people are asking about land loans these days. Oh, well, I'm going to buy a piece of land and build my own house. In the state of California, that is practically impossible. I mean, not logistically impossible, but it's just so cost prohibitive. It costs so much more to build a home, like here in San Diego, for example. It would cost so much more to build one home than it would to buy a home that already exists, that you'd be a complete idiot to do it. If you actually looked at the numbers, it would make no sense at all. Unless you just desperately wanted a brand new home but didn't have a real good reason other than that. Listen, it is so much more expensive to build a home than it is to buy an existing home. So, if you're considering that, go ahead and consider it. When people ask me about it, I always send them here's where you go for a land loan. Here's where you go to talk to someone about construction costs, turn times, permits, how long it's going to take, how long you're going to be paying on, that before you can actually live in the place. And there's just so many things, with construction that are very, very difficult. One of the things that has changed over the years, I'm old enough to remember when you bought a house and you had it appraised, the cost approach actually factored into the appraisal significantly. And the cost approach is how much would it cost to rebuild this house. Now it's all comparative approach, which means you're just looking at comparable sales, similar homes. That's changed. And I think the cost approach needs to come back in. It's to more of the forefront. It's still factored in a little bit. Some appraisers, you can tell, completely ignore it. But if you really did the work on that, you would see, particularly in San Diego, the market I know the best, most of these homes are selling, even though we're up huge, 20% plus year over year, most homes are selling for far less than the cost approach, far less than what it would cost to build the same house. So you tell me what the value of real estate is, but to me, the value of something is based on the alternatives, right? I mean, if I'm sitting here starving and I have, a pile of grass, dirt, and then, I'm vegan, so I wouldn't eat, but a steak, and I'm starving, yeah, the steak is great. But if I have the steak and then I have, great vegan salad over here, then I'm going to choose a salad. So it's based on options. And so if value is based on options, then, your options of buying this place for 1.2 million or building it for 1.5, which one's the better deal? Like, to me, real estate is still undervalued significantly. And this is an absolute it's a bad headline. It's a bad headline because it's really not true. It's not what's actually happening. And I want you to know the truth. Who doesn't like Netflix? Netflix is one company I think that's doing everything right. They're overspending on their production a little bit. And that's causing them to miss, earnings. But isn't it worth it, though? I mean, the content on Netflix is so awesome. I mean, it's really tremendous. And the fact that they're able to deliver it to you is so cheap. I mean, it's so cheap that literally everyone can have it. That's so cheap that everyone can have it. But yet they're making, these blockbuster films with A-list actors. It's really, really cool, I think. And to have known what Netflix was when they began mailing CDs and DVDs, I mean, that was just crazy. To me, Netflix is one of these companies that understands what they need to do to keep these subscriptions and continues to over deliver. So if you get a pullback in a Netflix, this is one I think you dollar cost average in with your kids, trust accounts or whatever, your college accounts, dollar cost average into Netflix. And I don't think you'll be disappointed. I think they will continue to do the right things, and just know there is a lot of fat in there that can be cut. And they can cut that in tough times if need be. But one of the things that's not going to happen, like this is a recession-proof business, people aren't just going to cut their Netflix account, right? If things go sour. I mean, you save $15. That's not going to get you anything. You're not going to notice that. That's not going to be on the chopping block. So I think it's recession-proof too for all the bears out there who think that bad things might be happening soon. So that's it. That's it for today. I'm going to close it out right there. I got a big event tomorrow. I'm going to go continue to practice what I need to do there. I need to make a couple calls, but wanted to get you up to speed on what's happening right now and what we should be paying attention to. A lot more to come in the next few days. Bitcoin hodlers out there, get your hazmat suit on. It very well could get ugly here soon. So take care, guys. Share this video. Have a great day.